first, what to look out for with these advertising-driven names. I mean, we've been talking so much about China, but these names actually have very little China exposure. So is it all upside, or are there some potential points of concern?
Yeah, I think about this as a proxy for global growth ex-China, right? So Europe's a big component of digital advertising. The UK is a big component. And what I'm worrying about is a slowdown in UK retail sales that filters down to online advertising. Germany, Italy, France as well. So what I'm picking up in my challenge checks is that outside the US, some of the more stable Western European markets may have slowed down as the fourth quarter played out. So it's not a China issue. It's really, Western European markets, just consumer spending slowing.
Now, I'm a little surprised you're not more bullish on Facebook, given how far down it's been in recent months. Why?
Right. So we downgraded Facebook over the summer. And we looked at it, we said, okay, Facebook is a terrible setup where you have revenues decelerating, maybe down to 25, 26%, and expenses accelerating up to 53%. So you look at operating profits, there's no operating profit growth, right? So they have to convince me and the market that the move from a newsfeed marketing platform to stories-based is accretive, right? And I think we're still in the early innings of that. So somewhere maybe middle of this year, you will get evidence whether or not this is a good trade. But right now, I still think that move from a feed to stories is dilutive to revenue growth.
I want to go back to the slowdown in advertising spending in Europe. Is that more of a reflection of a slowdown in growth there, or is that more of a reflection of GDPR, these new privacy rules that have been put in place?
Yeah, so it's a great question. GDPR, we've not picked up a lot of negativity, even from last summer when it started. To me, this is about the economy, that consumer confidence and consumer spending. Like our UK challenge checks talked about a real slowdown in the UK that surprised them. So it sounds like consumers have gone on strike in some of these markets, and where you're looking to sell, web-based or mobile-based, performance-based advertising, if consumers are not buying, there's no reason to put money to work when there's not a click to buy, right? So that's what's worrying me. It's not the US, it's really the rest of the world, and China's not my problem, right? But GDPR is in the background, but that's not the reason what's happening here.
Mike Santoli, Netflix's report, pretty positive overall. How important are Facebook and Google? Google's next week, but let's start with Facebook since it's this week, to a sense of market momentum. It used to be FAANG was so important to that overall. Maybe not anymore?
I think we broke that theme of FAANG has to be the leader. Obviously, all the stocks are down quite a bit off their highs to varying degrees. Apple tonight, obviously not in traditional FAANG, but is an interesting test of exactly how low expectations have gotten. Stock has had a weak bounce off its lows from that January 4th or whatever.
It still matters, even though it's got its own
It still
story.
matters, not because it's a bellwether for what the overall market's doing, but as a risk sentiment tell, I do think it matters. Facebook's a similar situation, right? I mean, it's a change of narrative from these are bulletproof business models that can grow in any environment to let's check out what cyclical sensitivities they have and whether there are other challenges. So I don't think it's an all or nothing, trade, how these things go. But the overall market is trying to figure out just how much of a slowdown we've priced in across the board. And that's, I think, what this earnings season has been trying to hash out.
Can I say, it was easy to recommend Facebook. It was easy. They're growing 40, 50%. Expense growth is 20, 30%. The margins are expanding so fast. But last year, the narrative changed. I think we're all trying to figure out what's my new narrative, what's my new storyline here. So that's a much tougher call. I think Google's fine. We have a buy in Amazon as well, and we think that's fine too.
Well, although, I mean, the argument on Facebook for buying it would pay, even with reduced growth and or higher expenses, the margins are still pretty strong. And when you look for a top line growth rate in double digits, you're still going to get it at a really reduced multiple.
Right. What I'm worrying about later this year is regulation, right? So the question is, what does the U.S. government do on regulatory change, right? So you have a California rule that's kicking in next year, GDPR. Are we out of the woods yet on regulatory? I know we talked last time I was here about potential changes to U.S. policy on privacy. That's an unknown. So we need to get through that, right? And that's new for technology. We've never seen regulatory before.
What about Amazon and its advertising business, which we now focus on each time it reports earnings? Is it expanding the pie, or is it cutting into market share for Facebook and Google?
So Greg Mell covers Amazon for retail for us, but it's a little bit of both. So it's a little bit of cannibalization that's so small now it's not noticeable, but they're also growing the pie from other types of advertising. So things like below the line, so in-store marketing, coupons. That's going to Amazon. So I'm not seeing it yet, the source of Apple and Facebook's woes. I mean, not at all. But that's something we're really aware of. Like the focus is, can this happen? Could this slow down the growth more than we think on the two other names?
Mike, we talk a lot about the FAANG stocks, but Microsoft has been a really strong performer as well over the last couple of years. Should we be paying more attention to their earnings, especially given the fact that they're more enterprise-facing, less consumer-facing, less, I guess, exposed to all of this data and regulatory uncertainty?
I think we should spend a lot of attention paying attention to Microsoft, mostly because it's been such a strong performer, and it's sort of revealing what's working in this environment. Software in general, I mean, as other things have fallen away, right, as social media have kind of trailed off, as semiconductors rolled over, it's software that specifically that has kind of been the last high ground for the NASDAQ anyway.
What I'm wondering about where Microsoft is concerned is to what degree the cloud was affected by this China slowdown and some of these data center issues. Like it was said that Microsoft and Amazon both slowed down their hardware purchasing during the quarter, and that affected Micron, it affected Intel, some others. But did they slow it down just because they had bought enough ahead of time, or did they slow it down because they saw their top line slowing down?
Right. Yeah. So it was it a lull in the investment cycle for cloud? And that's. Do you think Microsoft's going to have an answer to that?
Well,
in terms of whether it was end demand?
The numbers should give an answer.
Yeah.
If their growth rates, I suppose, continue to be strong. I mean, do you see similar read-throughs or tells in any of the other stocks in your universe that are reporting this week?
Well, it's interesting. We cover media as well, and media, we're looking forward to first quarter commentary, right? Because fourth quarter, people don't cancel fourth quarter advertising. It's made back in May. But first quarter, with auto sales, you've talked a lot about auto sales on this program, and you don't have a political cycle ahead of you this year. So what happens in first quarter? So we're really focused on the guide for first quarter for all these names.